Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. stocks get whipsawed amid tariff uncertainties. Easing inflation to support increased consumer spending in the Philippines. Damien Yo of BMI joins us live from Singapore. Cebu Landmasters Inc. reports an 8% gain in its 2024 earnings, fueled by high demand for its properties. Chief Finance Officer Franco Soberano joins us live from Cebu. And all aboard! To-Go transports Holy Week revelers into the Easter holidays. We check in with Francis Chua of To-Go Travel as their docking bays are teeming with holiday seafarers. Hints at the possibility of temporarily relieving the auto industry from his tariffs to prepare their vast and complex supply chains. Trump acknowledged on Monday that automakers, quote, need a little bit of time moving production to the U.S. to avoid facing huge levies. Vehicles assembled outside the U.S. are charged with a 25% duty, while imported car parts will get a 25% tariff starting early May. At the same time, automakers are grappling with different sets of tariffs. Experts say that a short pause is inadequate for automakers to adjust their global supply chains, but an exemption in car parts can provide a sigh of relief. Meanwhile, China commits to expanding trade relationships with other countries amid its escalating trade war with the U.S. This comes after the White House dares Beijing to make the first move in quelling trade tensions.
The ball is in China's court. China needs to make a deal with us. We don't have to make a deal with them. There's no difference between China and any other country except they are much larger. And China wants what we have, what every country wants, what we have, the American consumer. Or to put it another way, they need our money.
面对外部的不确定性
In the face of external uncertainties, China will insist on joining hands rather than throwing punches, tearing down walls instead of building barriers, connecting instead of decoupling.
Some companies are already being stuck in the middle of this escalating trade war. Bloomberg reports China has ordered its airlines not to take further deliveries of Boeing jets. Air China, China Eastern Airlines, and China Southern Airlines all plan to take delivery of Boeing planes between 2025 and 2027. China also banned carriers from buying aircraft equipment and parts from U.S. companies. While NVIDIA says in a regulatory filing that the U.S. government ordered the AI chip maker that its popular H20 chip would need a special license before being exported to China. NVIDIA expects to take a $5.5 billion blow due to this clampdown, sending its shares down in after-hours trading. The U.S. government took this step to avoid using the chip for a Chinese supercomputer. NVIDIA already announced on Monday that it would start manufacturing AI supercomputers entirely in the U.S. And U.S. markets closed lower Tuesday despite gains earlier in the session as investors remain wary of Trump's policies. The Dow declines by nearly 0.4%. S&P 500 nearly down about 0.2%, and the Nasdaq slides by less than 0.1%. Taking a look at the benchmark 10-year Treasury yields, we have seen those inch lower, settling at 4.322%, while gold prices inched higher, settling at $3,218.70 per troy ounce. As for the Asian markets, they've ended yesterday's session higher, with automakers making those gains, with the ASX 200 rising by about 0.1%. South Korea's Kospi climbing 0.8%. Shares of Hyundai and Kia up by over 3%, beating the markets there. And Japan's Nikkei 225 up about 0.8%, with the shares of Toyota and Honda also up by over 3%. Hong Kong's Hang Seng has gained over 0.2%, and China's CSI 300 index has gained just about 0.1%, with Taiwan's TAIEX rising by over 1.7%. Let's take a look at U.S. futures. They're pointing to a decline when the markets opened later tonight, Manila time, with all arrows down. The Dow falling nearly half of 1%, S&P 500 down nearly 1%, and the Nasdaq shedding by over 1.5%. As for Asian markets, they're opening Wednesday slightly lower as investors are watching first quarter GDP, industrial production, as well as retail sales, unemployment figures later in the day. The ASX and the Nikkei 225 are both down less than 0.1%, with the Kospi falling about 0.25% as we speak. Well, with us now for more live from their home base in Cebu, Cebu Landmasters Chief Operating Officer Jose Franco Soberano. Maayong buntag, Franco. Welcome to the program and congratulations on your results.
Hi, good morning, Cathy, and thank you for having me.
Right,
it's our pleasure to be here.
Right, it's a fine time to talk about your business because it's looking pretty good in Vismin, but with all that's happening across the world with Trump's tariffs, as well as an oversupply right where I'm at in Metro Manila, what are the conversations like with the board of CLI on how to take things in stride?
I think the conversations here are quite positive. Visayas Mindanao is an underserved market. It's reflected in our earnings, and it's reflected in our sellout rate. So we are 94% sold out across our 40,000+ inventory. So that alone tells us that we're not building enough, and we're selling more than we're launching. It bucks a trend definitely, but we also see the Metro Manila situation as temporary. We have such a strong demographic situation, Cathy. I compare Philippines to the other countries abroad, and we are still in a demographic sweet spot. It's about developers really identifying the opportunities, no? And while there's some doubt in the industry.
Right, it's great that you're selling out strong and that's indicating strong demand, but how do you manage prospective risks to construction costs? I mean, when I look at construction materials costs, they've risen for a third month because of those tariff pressures. Contractors receiving price hike notices and several key inputs, and that's complicating efforts to plan and budget around those new projects.
Interestingly, because that's really under my territory, under my oversight, I don't feel that right now. I'm still getting very favorable steel prices. I see stable cement prices. It might even be, I would say, beneficial to us because there will be more supply coming to our region. When I say our region, Southeast Asia or Asian countries that supply construction material to us, we will give more competitive and aggressive pricing. So you're right, costs have gone up in the last 3 years due to the supply chain disruptions and the pandemic, but it's quite stable now. I think it's reflected in our inflation rate that has stabilized quite well. So we're looking at it positively that it will benefit the developers here in terms of pricing so far.
Pretty interesting you mentioned that everybody's going to come here. So that pretty much means like dumping. So that also poses as a problem when you try to reprice. So how do you chase prices and reprice as the cost of materials go down?
I think like a project, of course we don't buy everything in one go, right? We're building now over 20 different projects at the same time. It's normal course of business for us. So a condo project takes 4 years to build on average. A housing development takes 3 years. So we buy as it's needed. Now it's a just-in-time approach. So we're protected that way because a lot can change in 3 months, in 6 months, in a year. So we're taking advantage of pricing opportunities now, but we're not locking in anything beyond 3 months or 6 months. So I think that's how we manage it from our supply chain perspective.
It helps to be agile. So what is your launch and reservation sales target this year then? And what is it going to be focused on? Is it going to be on your flagship economic segment brand, Casamida?
Thank you for asking. So we had 20 billion of reservation sales last year. We're targeting hopefully 23 billion. We're quite bullish, Cathy. It might be counterintuitive for us, but we're really running out of inventory. That's why our sales in Cagayan de Oro, we sold 4 billion in 2 days. We sold out a 3-tower condo project in less than 2 weeks. It's refreshing, right? There's demand out there. So we're hoping to grow from 20 to 23 billion in our sales this year. And you're right, it's majority is coming from the affordable segment. Our Casamira brand is a top-selling brand in the region. And even the mid-market brand besides Mindanao is still very strong.
So it's a happy problem. If you're selling out inventory so fast, can we then expect a strong acceleration in the project launches this year?
We can expect a strong acceleration in projects this year, definitely. We're gearing up to do so. Of course, in real estate, they say it's one of the most regulated industries, right? There are just a lot of permits to do, a lot of clearances to get. But I depend on the strength of my team. Now, we have a 1,000-people team here spread across the region, and I just need to motivate them well so that our timetables are hit.
Okay.
And so we can deliver for our shareholders as well.
And deliver in Cagayan de Oro in just 30 seconds. Is it all sold out?
It's now like 90+% sold, but we just launched a month ago. So it's one of our happy records in recent memory, to sell out that fast. So Cagayan de Oro is such a strong magnet of the northern Mindanao region. There's a lot of purchasing power there. So it's really about bringing the right, we call it in besides Mindanao, the right value for money product needs to be brought to the market.
Well, daghang salamat, Franco. Thank you so much.
Sige.
And best wishes to Dad Joe, who's been traveling. Happy
I will.
Easter to you all. Franco Severano, the CFO of Cebu Landmasters, Inc. We have more conversations coming up here on Money Talks. Louis Garrad of Mercer will discuss using AI in the workforce. And BMI's Damien Yeo talks about their forecast that the Bangko Sentral will further lower rates by 50 basis points. That's coming right up. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Let's take a quick check on the Philippine markets on this last trading day of the week. The PSCI opens this Holy Wednesday slightly lower by nearly 0.2%, 6,175 to be exact. The stock market closed yesterday Tuesday higher by 0.6%. Let's take a look at the Philippine peso that has opened slightly weaker as you see it at 56.82 the dollar. Peso closed yesterday stronger at 56.77 against the greenback. The markets are closed on Monday, Thursday, and Good Friday, both regular holidays, and trading resumes on April 21st. Bangko Sentral Governor Eli Remolona told me on this program last Friday the trickier part of the April 10 Monetary Board policy decision was how many more local rate cuts were coming for the rest of this year. For more than inflation or the lack thereof was the threat of slower economic growth because of the global policy uncertainty.
We're looking at slower growth, which is kind of a first in the last few years. And then we're looking at lower inflation, which is kind of good news. It gives us more degrees of freedom. There's risk that we will see lower growth than before.
So if that's the case, would maybe 5%, 5.5% be the lower end of the band then?
I'd say more like 5.2, but not less than that. We're still hoping for 6.
BMI's country risk team maintains its forecast that the Bangko Sentral will further lower rates by 50 basis points to 5% across this year. With us now for more from Singapore is Damien Yeo, Senior Consumer and Retail Analyst at Fitch Solutions Unit BMI in Singapore. Good to see you, Damien. Welcome to the program.
Hey, Cathy. Thanks for having me.
So BMI got its forecast right. The 25 basis point cut by the Bangko Sentral last April 10th. After hearing from Governor Eli Remolona last week, are you holding out for further cuts this year?
Yeah. For now, our country risk team is maintaining our forecast that the BSP will further lower rates by 50 basis points to 5% across 2025. There is, of course, certainly room for revision of this figure, particularly if we consider the potential impact of how U.S. protectionist policies will evolve. But since everything is effectively in flux at the moment, we will need to hold and watch further. In fact, I believe this morning it was reported that the Philippines will be sending a delegation to the U.S. next month to negotiate the tariffs. So as you can see, everything is still very much in the works. But what we can say with confidence is that the BSP will probably look for another 25 basis points cut at the next meeting that's scheduled for June 19th.
Right. So
And now, yeah.
what kind of inflation projections then are you basing the 50 basis point cut for the full year, with inflation in March slowing to a 5-year low?
Yeah, so as you said, the reason why we're confident is because there is inflation in the Philippines have been relatively subdued. As you mentioned earlier, having eased to a near 5-year low of 1.8% in March of 2025. And over the rest of 2025, BMI projects that inflation in the Philippines will average about 2.6%. And this is, of course, well within the BSP's 2.2 to 4% target range, which will then, of course, give the bank the flexibility for another rate cut.
Yeah, but Trump's tariffs have pretty much complicated projections, especially when it comes to GDP for the full year, as the governor just rightfully said. So what are the chances that slower GDP would hit private consumption levels?
Well, Trump tariffs have certainly compounded the challenges faced by the Philippine economy. And we believe that Trump policy support will be crucial for achieving the government's 6% lower bound growth target. That being said, as you mentioned, Trump's tariffs certainly do pose downside risk to inflation. Although, if anything, I think the case for more easing has actually strengthened, right? But of course, if negotiations fall through, and the Philippines is indeed slapped with a 17% tariff, then we will, of course, revise our policy rate forecast to pencil in more cuts. Now, consumption-wise, the overall story will be, of course, that slower growth will affect private consumption. This is because as economic expansion decelerates, job creation and wage growth could also be affected, which then leads to a reduction in disposable incomes. This means, of course, households will face more budget constraints and increased financial insecurity.
Okay.
Consequently, consumers will then become more cautious when they spend, prioritizing essential goods and services over more discretionary purchases.
Okay, well, keep an eye out on those forecasts because, as you say, they might change. But thank you so much, Damien Yeo of BMI in Singapore.
Thank you.
And cash remittances from overseas Filipinos grew by 2.7% year on year in February, reaching over $2.7 billion. That's the slowest pace in 9 months. Data from the Bangko Sentral ng Pilipinas shows this is slightly higher than the 2.6% growth recorded in the same month of last year. However, it is slightly slower than January's 2.9% and the weakest since the 2.5% growth recorded in January 2024. Breaking it down, most of the money came from land-based workers, sending around $4.5 billion, while sea-based workers sent over $1.1 billion. The U.S. remains the top source of remittances, followed by Singapore, Saudi Arabia, and the UAE. Economists say growth remains steady, but may face pressure from a strong peso, global uncertainties, and stricter immigration policies in the U.S. Will AI augment our work and help us, or automate our work and take our jobs? Those are the questions Wall Street Journal posed to MIT economist Senthil Mullainathan, who contends that is up to us, and we're doing it wrong. He makes the point that AI isn't a thing that's happening to humans, but a thing that humans are making, and we have a choice about what kind of technology it becomes. Our next guest says the hype over artificial intelligence has not delivered on its promises or projected outcomes, resulting in the need to relook productivity. Joining me now from Singapore is Louis Garrod, career practice leader at Mercer. So good to see you, Louis. Welcome to the program.
Thanks, Cathy. Great to see you.
So on balance, is it good or bad on the talent front, with the AI hype not really hustling the need to reimagine, if you will, the big word, productivity?
Yeah, thanks, Cathy. Really, it's a mixed picture. AI presents an amazing opportunity to really improve the quality of work that people do, to make the experience of work more engaging, more meaningful. But of course, it will automate and take away some tasks within work, and therefore, people really need to think about how they're going to adapt to that and bring new skills to the workplace so that they can continue to be productive and to really integrate artificial intelligence into the way they work.
What it really means for pay, ready or not, leveraging analytics to improve fairness in pay, really a compelling development here. How you structure rewards is one, and the other is communicating that to everybody. But how much of a priority is it when it comes to Southeast Asian jurisdictions?
Yes, it's always been a priority, Cathy. Of course, competitive rewards is the main way in which we motivate and engage the workforce. But what HR teams and business leaders have seen in recent years is that cash compensation can't be the only way which we motivate and engage people. They need to think of a much broader deal. And so after the pandemic, you saw a lot of companies really looking at their reward programs, modernizing those. And now we've seen a reduced focus on that. It's not gone off the table, it's still there, but a broadening of perspectives around what the total value proposition of work should look like. What can you learn? How can we bring new skills and capabilities to you? What kind of benefits can we offer? How do we think about your well-being at work, not just the paycheck that you take home? So we've seen a lot more focus in those areas in recent years.
And really how to bring about a robust work culture, fair pay, bringing forth trust between employer and employee. But how much of a gap are we facing when it comes to Southeast Asian jurisdictions?
Yeah, there still really is a gap. And the main reason for that is that many people are not clear. They don't feel it's very clear to them how their pay is designed, what goes into making decisions around how much they earn. And when we talk about fair pay, what we really mean is meritocratic pay, and pay that is competitive, and that people can look at what their compensation is and say, I understand what goes into that. So, of course, we can't tell everybody everything, but what's important is that people have a better understanding of the way that their pay is calculated, and they see it as competitive for the skills that they're bringing to the workforce. So we are seeing organizations really thinking carefully, as you said, about how to communicate compensation and how to get people to really understand how it's calculated.
Very interesting. And really the bottom line, bringing happy people to work. Thank you so much, Louis Garrad, a Mercer in Singapore, for those insights. Coming up after the break, To Go Travel's business unit head Francis Chua talks about transporting Holy Week travelers to their provinces. Stay tuned to Money Talks on One News. Welcome back to Money Talks. I'm Cathy Yang. President Bongbong Marcos has approved the renewal of Meralco's franchise, giving them the green light to operate for another 25 years. The law allows Meralco to continue supplying electricity in Metro Manila and nearby provinces until 2053. The company's current franchise is set to expire in 2028. Meralco Chairman and CEO Manuel V. Pangilinan welcomed the news, calling it a recognition of the company's role in helping power the nation's growth, fortifying their commitment to deliver stable, reliable, and affordable electricity to millions of Filipinos across their franchise areas. To seaports, Holy Week holiday makers are pouring out of the city and into all forms of transport just to get everybody home or to their planned destinations for some me time with friends and family, and yes, some reflective, meaningful days spent counting down to Easter Sunday. Let's head on over to To Go Travel's business unit head Francis Chua, who apparently joins us now from another lovely destination in Sydney. I guess you've got off ahead of the holidays, Francis, but really appreciate you taking the time to speak to us for a few minutes.
Hi, Cathy. Happy to be here in the show.
So how's the volume of traffic looking at all your seaports and into your To Go Travel ships?
We're looking at very, very busy Easter holiday. In fact, we've started looking at the passenger volume of around 80% already in most seaports. That's quite a lot comparing to the rest of the months in the year.
Is it more than last year's 80%?
We're looking at quite the same number versus last year, but this year we're kind of bullish because I think some of the changes we've been making on the ship has also quite inspired some of our passengers to come on board and try our ships again.
So where are the bulk of the people heading off this year? Which island or region or province or city?
It's still the big ones. So we're looking at Cebu, Bacolod, Ozamis, and Butuan. So we travel as far as Visayas and also Mindanao, but our Mindanao legs are always so full. We're very happy with the passenger volume, in particular in these routes. We're also seeing quite a number from our Batangas port, which travels to Boracay and Rojas and Romblon. So those routes are quite full.
Well, how are ticket prices though? Did the lower global crude prices give you some room to cut prices, or did you raise them anyway, given the peak demand?
So what we did was to actually was to pre-sell some of our tickets ahead of time. So for example, if you actually bought our tickets early on in the year, then you would have gotten quite a good deal. But some passengers are also catching up the last minute and so paying also quite close to sailing date, but the rates are still quite affordable. In fact, we wouldn't believe that we're still cheaper than airlines. So that's why I think we really invite our passengers to really try on Cebu travel.
Great. Well, Sydney is a good destination if people are not thinking about the Philippines. Hope you enjoy your Easter holidays. Thank you so much, Francis.
Thank you.
Really appreciate the time. Francis Chua there of To Go Travel in Sydney. Before we go, rain may have stopped play, but not Alex Ayala's momentum. The Filipina tennis star came back strong after a rain delay and defeated Dutch player Ando Kavermans 6-3, 6-4 sweep in Oyera's Ladies Open round of 32 match in Portugal. The match was halted Monday with Kavermans leading 4-2 in the second set. When it resumed Tuesday, Ayala quickly won 4 straight games to seal the win. Seeded first, the 19-year-old Filipina is eyeing her first singles title in the tournament. What a way to go to the Easter holidays. That is it for Money Talks. Before we enjoy the Easter break, I'm Cathy Yang. Catch us again Monday, 9:30 a.m. here on One News. Have a restful and meaningful Holy Week break.